In this example video, we're going to look at review exercises 12.5 and 12.6. We're going to be looking at how do we record the acquisition of an intangible asset, and then how do we amortize those intangible assets. So in review exercise 12.5, it tells us that our Mystic Pizza Company purchased a patent from Prime Pizza Plus on January 1st, 2019 for $72,000. The patent has a remaining legal life of 9 years, and we need to prepare the journal entries to record the acquisition and the amortization for 2019, assuming that Mystic Pizza amortizes its patent using the straight line method over the life of the asset. So every patent has an actual definite life, meaning that there is a definite end to it. There only has a legal life of 20 years in total. So your useful life that you utilize to do amortization of a patent can never be longer than that 20-year legal life. It can, of course, be less than that because we're always looking at the useful life. So I might have a patent for something in the technology space, and we know technology is changing all of the time. So although it's legally, I have the rights to that patent for 20 years, that patent might actually only be good to my company for about 3 to 5 years. So we'll always be amortizing over the useful life. In this case, they're telling us the remaining legal life isn't in fact the useful life. So we're going to journalize those entries. So they tell us that on January 1st, we acquire that patent. So it's a patent, and we paid $72,000 to acquire that patent. And we're going to assume that we paid in cash for that acquisition of the intangible asset. At the end of the period, so on December 31st, we now need to record amortization expense on that patent. So total value is $72,000, and we are dividing it over that 9 years that we have remaining on that asset's legal life, which we're also utilizing as its useful life. So we're going to amortize it or bring it down in value by $8,000. And what we're going to credit here is, in fact, the patent itself for $8,000. In review exercise 12.6, it tells us that Mystic Pizza purchases a franchise from the New York Pizzeria Inc. for $96,000 on June 1st, 2019. The franchise will last 8 years, and again, they want us to prepare the journal entries for the purchase of the franchise on June 1st, and the adjusting entry at the end of 2019. So on June 1st, we again are requiring another intangible asset, and that's a franchise, for a total of $96,000, and we record it at the cash. We then have to do an adjusting entry, and we're doing that as of December 31st. So again, we have amortization expense. So in total, we paid $96,000 for that intangible asset. We think it's going to last 8 years, but we have not owned that intangible asset for the entire year. So we bought it on June 1st, goes through December 31st. So this is really important to pay attention to dates. So because it's June 1st to December 31st, we have to include all of June through all of December, meaning 7 out of 12 months that we're actually owning that intangible asset. So we would record $7,000 in amortization expense, and again, we're directly going to reduce that intangible asset, our franchise, by the same $7,000.